Imagine waking up to the news that a financial decision you made years ago has suddenly positioned you for a life you only ever dreamed of. This is the powerful, emotional hope that fuels the entire Iraqi Dinar investment community, a hope for a single momentous event that will change everything. For years, you've heard the whispers, seen the headlines, and followed the gurus promising that the long-awaited revaluation, the RV, is just around the corner. Today, we are going to cut through that noise and embark on a different kind of journey. We are not going to chase rumors or decode vague intel. Instead, we are going to build our understanding on a foundation of unshakable reality, on the official data and economic reports that actually dictate the future of the Iraqi currency. This is not a speculative fantasy. This is a deep dive into the genuine documented forces at play. And by the end of this three-part series, you will have a clearer, more sober, and ultimately more powerful understanding of what is truly happening with the Iraqi dinar than ever before. So, let's begin not with a promise of wealth, but with a commitment to the truth. The cornerstone of any rational discussion about a currency is its actual tradable value. As of today, the exchange rate for the Iraqi dinar is not a matter of speculation. It is a published, concrete figure. According to global financial data providers, the exchange rate stands firmly at approximately 1,310 Iraqi dinars for one United States dollar. This rate is not new. It has been the general range for an extended period, reflecting a state of deliberate stability managed by the Central Bank of Iraq. This is the first and most critical piece of data we must accept. It is the baseline from which all realistic conversations must start. The Central Bank of Iraq's primary public mission has been to maintain this very stability, to control inflation, and to ensure the currency can facilitate daily trade and commerce within Iraq and with its partners. They have not been working towards a sudden, astronomical revaluation. Their publicly stated goals, visible in their official communications and monetary policy statements, revolve around strengthening the banking system, promoting a digital payments infrastructure, and managing the country's foreign currency reserves to support the official current rate. This is the reality of the present moment. The dinar is not in a state of pre-explosion. It is in a state of managed equilibrium, a difficult task for any nation, especially for one with an economy as unique and challenging as Iraq's. And that brings us to the second pillar of our factual foundation, the broader Iraqi economy itself, because a currency is ultimately a reflection of the health of the nation it represents. To understand where the dinar is going, we must first understand the engine that drives it, the Iraqi economy. And here, the most authoritative reports come from international bodies like the International Monetary Fund. In their recent Article IV consultation, which is their standard, in-depth health check of a country's economy, the IMF provides a clear, sobering, and official assessment. The Iraqi economy remains overwhelmingly reliant on a single sector, oil. Hydrocarbon exports account for nearly the entire government's budget and the vast majority of its foreign exchange earnings. This creates a fundamental vulnerability. When global oil prices are high, the treasury flourishes. When they fall, the nation faces significant budget deficits. The IMF report from the summer of this year explicitly highlights these challenges, pointing to the urgent need for Iraq to diversify its economy, strengthen its non-oil sectors, and implement serious fiscal reforms to control public sector spending and wages. These are not the signals of an economy on the verge of triggering a currency revaluation that would multiply its value overnight. The signals are of an economy in a difficult, long-term transition working to build a stable and sustainable foundation for future growth. The discussions in official circles are about reform, not revaluation in the sense that the dinar community hopes for. They are focused on building a resilient economy that can one day support a stronger currency organically through genuine economic strength and productivity, not by a simple switch being flipped. This is the complex, real-world backdrop against which all news about the dinar must be measured. It is less glamorous than secret meetings and coded announcements, but it is infinitely more real. And it is within this context of stability and reform that we must evaluate any new plan, including the one mentioned in our title, which we will dissect with a factual lens in the next paragraph. So we've established a current reality, a stable dinar, managed by the central bank within an economy facing significant, but not insurmountable, challenges. This naturally leads to the critical question on every investor's mind: what comes next? Where is the Iraqi dinar headed? And what are the concrete, verifiable factors that will determine its future path? The answer to this is not found in secret prophecies, but in the clear, publicly available analysis from the world's most authoritative financial institutions. According to the International Monetary Fund's 2025 Article IV consultation, comprehensive health check of Iraq's economy, the nation stands at a critical crossroads. The report confirms that while Iraq has managed to uphold domestic stability despite regional turmoil, its non-oil economy has slowed down significantly. This is the heart of the matter. The IMF projects that without significant and urgent reforms, the country's fiscal deficits and external accounts are projected to deteriorate further over the medium term. This isn't speculation. This is a direct assessment from an institution that has a complete, data-driven view of Iraq's financial landscape. The vulnerabilities are clear and quantified. The large fiscal expansion in recent years has increased Iraq's vulnerabilities, with the oil price required to balance the budget having jumped to around $84 per barrel in 2024. Oil prices fluctuating, the financing constraints that emerged in 2024 are expected to worsen, and the risks of sovereign debt stress have risen, calling for what the IMF terms urgent policy action. This is the official sobering diagnosis. The prescription for recovery is equally clear and forms the true plan for the dinar's future, plan based on economic fundamentals, not on speculative sequences. This necessary path forward hinges on a multi-pronged approach that focuses on structural reform and economic diversification. The Central Bank of Iraq has already made commendable progress in one key area, stabilizing the currency. Its successful transition to a new trade finance system has contributed to a reduction in the spread between the official and parallel market exchange rates, key indicator of market confidence. However, the real heavy lifting involves fiscal policy. The IMF is explicit that a sizable fiscal adjustment is needed to mitigate macro fiscal risks and stabilize debt. In the very short term, this means the Iraqi authorities must review current and capital spending plans and limit or postpone all non-essential expenditure. But the long-term vision is even more critical. To build a sustainable economy that can ultimately support a stronger currency, Iraq must boost its non-oil revenues. This involves strengthening tax administration, increasing customs duties and excise taxes, and most significantly, introducing a general sales tax in the medium term. On the spending side, comprehensive public wage bill reforms are essential. The IMF suggests limiting mandatory hiring and adopting an attrition rule, which would yield significant savings for the state. Furthermore, reform in the public pension system by raising the retirement age is highlighted as an urgent measure. These are not exciting overnight changes. They are difficult, politically challenging reforms that require steadfast commitment, but they represent the genuine hard work required to build a foundation for organic, sustainable growth. This is the real massive cash out, a cash out of the old inefficient economic models and a strategic investment in a more resilient and diversified future for Iraq. Understanding this official roadmap allows us to contextualize the expert forecasts you see in the financial markets. With this reform agenda as the backdrop, the projections for the dinar become much clearer and are far more measured than the hyperbolic claims you might find in speculative forums. Reputable financial analysis firms reflect the stable but constrained outlook. As of late October 2025, the consensus is that the Iraqi dinar is expected to remain relatively stable against the US dollar through 2025, with the exchange rate likely to stay within a tight range of 1.327 to 1.318 per USD. Looking further ahead into 2026 and 2027, projections suggest only slight potential fluctuations, rates possibly moving between IQD 1.280 and 1.350 per USD, entirely dependent on Iraq's oil sector performance and, crucially, its progress on the political and economic reforms we just discussed. Another leading economic data provider, Trading Economics, models a similar outlook, expecting the rate to hold at around 1.310 IQD per USD for the foreseeable future. These forecasts collectively paint a picture of managed stability. The probability of a sudden, dramatic revaluation in the near term is assessed by experts as highly unlikely, without a massive policy shift and deeper structural reforms. The more probable scenario, often given a 60% probability by market analysts, is one of managed stability where the central bank continues to utilize its substantial reserves, which were near $95 billion in mid-2025, and oil revenue to maintain the current peg. This is the data-driven reality of the dinar's trajectory. It is a story of gradual, incremental progress built on reform, not a fairy tale of instant, life-changing wealth. It is a currency being carefully steered through complex economic waters, not a lottery ticket waiting to be cashed. And in our final paragraph, we will bring this all together to discuss what this genuine evidence-based understanding means for you, the investor, and how to navigate this landscape with clarity and confidence, separating the real opportunities from the pervasive and costly myths. So we have navigated the solid ground of the dinar's current stability and journeyed through the challenging but necessary economic reforms that chart its future course. Now, we arrive at the most critical part of our discussion, what this evidence-based reality means for you, the viewer, and how to navigate a landscape so often clouded by sensational promises and costly misinformation. The undeniable truth we have uncovered together is that the Iraqi dinar is a currency being carefully managed for national economic stability, not a speculative asset poised for a life-changing revaluation. The Central Bank of Iraq's focus, as confirmed by the IMF, is on strengthening the banking system, reducing the gap between official and parallel market rates, and implementing a difficult but essential structural reform agenda to build a sustainable non-oil economy. These are the actions of an institution focused on long-term economic health, not on orchestrating a sudden windfall for foreign currency speculators. The official data and expert analysis from institutions like the IMF and financial forecasters point unanimously to a future of continued managed stability for the dinar, with projections showing the exchange rate holding within a narrow band around 1.310 IQD per US dollar for the foreseeable future. This is the consensus view of the global financial community, and it stands in stark contrast to the alluring but unsubstantiated rumors of an imminent RV that have circulated for years. Understanding this fundamental disconnect is your single most powerful tool as an investor. It is the shield that protects you from disappointment and financial risk. Brings us to a crucial point we must confront directly: the ecosystem of misinformation. For years, a parallel universe of online forums, self-proclaimed gurus, and cryptic intel sites has cultivated a narrative of an impending global currency reset that will miraculously multiply the value of the dinar. These sources often speak in a language of coded updates and secret meetings, creating a sense of insider knowledge and imminent breakthrough. However, when you hold these claims up to the light of verifiable evidence, they evaporate. No credible international financial institution, not the IMF, not the World Bank, and not the Central Bank of Iraq itself, has ever confirmed the existence of such a plan. In fact, the IMF's 2025 report outlines a path for Iraq that is difficult in reform, focused, requiring urgent policy action to address fiscal deficits and control the public wage bill, a scenario that is incompatible with the fantasy of a near-term, massive currency revaluation. These speculative communities thrive on hope and confirmation bias, not on data. By choosing to anchor your understanding in the official reports and economic indicators we've discussed, you empower yourself to see through the noise. You are no longer a passive consumer of rumors, but an active, discerning analyst of reality. This shift in perspective is more valuable than any speculative currency purchase. Therefore, the most important call to action I can leave you with today is not to buy now before it's too late, but to become a lifelong pursuer of verified information. Your financial future is too precious to be built on the shaky foundation of internet rumors. Let this video be the turning point in your journey. When you encounter a sensational claim about the dinar, pause and ask the critical questions. Where is the primary source? Is this claim being reported by the Iraqi Gazette, the Central Bank of Iraq, or the IMF? If the only sources are anonymous bloggers or paid newsletter writers, you have your answer. I urge you to make the IMF website, the Central Bank of Iraq's official communications, and reputable financial data providers your go-to sources for information. This is how you build true confidence and make informed decisions. The path to genuine financial knowledge is not always exciting, but it is solid, reliable, and it will never lead you astray. It is the path that respects your intelligence and safeguards your hard-earned capital. You have taken a massive step today by seeking out a deep, factual analysis, and for that, I commend you. Now, as we conclude, I want to turn the floor over to you. Your engagement is what fuels this channel's mission to cut through the confusion and deliver clarity. So, here is my final call to action for you. If this deep dive into the facts behind the Iraqi dinar has brought you value and perspective you couldn't find elsewhere, then please show your support. Like this video to let me know you appreciate evidence-based analysis, and subscribe to the channel with notifications on so you don't miss our future explorations of complex financial topics. I want to hear from you in the comments below after hearing this breakdown. What is your biggest takeaway about the Iraqi dinar? And share this video with anyone in your network who might be seeking a clear, factual perspective amidst the overwhelming speculation. Together, we can build a community dedicated to financial literacy and informed investing. Thank you for watching, for trusting this channel with your time, and for committing to the path of knowledge. I look forward to continuing this journey with you. Until next time, stay informed and invest wisely.